Okay guys, welcome back. As you can see from the title, we're now on Forex Scalping Part 3, Understanding Structure. For those of you who have seen the previous two videos, it's absolutely fantastic. I'm glad you're actually back with us. We're really getting into some good stuff now. We're going to start actually looking at charts. And this is probably going to be the first thing you're going to start actually doing, going away from this video, checking your own charts and putting stuff into play. If you haven't seen the first two videos, I'll put the link up at the top or in the description. I recommend you watch both of them. The first one's on a little bit of context on me, just so you know who I am, and the second video is going to cover some basic concepts which I feel are essential for you to progress throughout this series. Like always, my Instagram is down at the bottom of the screen right now. I recommend that as the best way to contact me. I've also got a lot of content on my page which you can use as a visual reference for your own learning. So let's jump straight into it. We're going to go straight on to first looking at, well, what is structure? So you hear a lot of traders talking about structure, and they'll use it in their own methods and strategies, but we actually need to understand what it is first. It's only a simple explanation. You don't need anything more than this, but basically it's the natural movement of the market forming a series of peaks and troughs. So the peaks are these higher points, what I've got demonstrated here on this chart. This is GBP JPY on the 4-hour, and the troughs are these lower points. So as the market moves, it's always going to form these peaks and these troughs as a series. They're going to follow each other. And what the aim of this video is to help you be able to identify these and make sense of what they mean and how you can use them in your own trading strategy. It also allows you to determine the overall direction of the market. So when we come into the market each day, what we want to basically do is pick a bias. So the best way you can possibly do that is going onto these higher time frames, looking at these structure levels that I'm going to teach you about, and use that for the duration of the day to pick, okay, which way am I likely going to want to trade so that I've got the best chance at success. Okay, so like it says there, you should always be aware of the structure levels. Make it the first thing you do each morning or evening or whenever you come to the charts. Just spend 5 or 10 minutes going on the higher time frames and checking the charts. Excuse me. Okay, so let's move on to the next part. How can we use structure? So structure's not just got one purpose. The way I use it changes. So first thing, we're going to identify the overall trend on the higher time frames like we've just spoke about. So we're going to look at which way the structure's forming, which way the peaks and troughs are moving overall in general, so that we can use that as our overall bias for the day, in which we'll then use the lower time frames to look for actual entries in the same direction as our overall bias. Okay, so we can also use it for looking for optimal areas to take positions from on the lower time frames. So when you've got the higher time frame structure, you'll often find that the lower time frames, for example the 30-minute and 1 hour, will respect these higher time frame structure levels. But the lower time frames will also form structure levels like we saw on the previous slide, the peaks and troughs. The lower time frames will also make them, and often what you're going to want to look for is the structure level on the lower time frames matching up with the structure levels on the higher time frames, because then what you've got is confluence, and if you've got confluence, you've got a higher chance of succeeding in your overall positions. Okay, so what's another thing? We're going to look at structure for choosing a sensible area to take profits from. So when we're in a trade, we need to pick, before we even enter the trade, where we're planning on targeting. We don't want to target the moon, because the chances of us actually hitting that is quite slim. And like I said on the last video, we're going to look for small portions of the larger moves. And so when we're actually doing that, we're going to look at the 30-minute and the 1 hour and look to the left and see where the structure levels are and use them as our target zones. And we can either be taking full profits at them zones, or we can take partial positions. It's just so that we're aware of where price could potentially turn around at these structure levels. So let's move on and take a look at some examples just to explain a few of them concepts. Okay, so first of all, identifying the higher time frames. the time frame trend. So on this chart, this is GBP/JPY, and at the bottom, I've got labeled on the troughs. So we've got a low which starts here. The next low we see, well, is kind of this one, but I'm going to label it at this because it's kind of the same thing. If we look left, if we match this up across, it's the same thing. So we've got a higher low formed, and then looking to the right again, we've got this low formed, which is also higher than the previous one. And then we go again and we look to the right and we've got another higher low formed. So overall, GJ on this 4-hour chart is forming higher lows. Okay, the same occurs for the peaks. So we've got a high here, and then we've got another high which is higher than the previous one. So that's great. This one here, okay, so this is kind of the same level, so that's fine. And then we've got this one here, which formed another higher high. So I'm sure you'll agree, if we look at this, we're going to say, okay, we're forming higher lows, sorry, and higher highs, which means overall, the actual trend on this particular chart is bullish. It's going upwards. So that's an example of how you can go to the charts in the morning, look at the overall trend on the higher time frames, and you might add that into your trading plan then, saying, okay, if the overall overall trend on the higher time frames is bullish and upwards, I will only look for positions of buys or to the upside during the day. So you'll not be taking any sells, you'll be waiting around, you'll be really patient and disciplined and waiting for these positions to set up so you can take a buy. Okay, so that's the first one. I hope that makes sense. We're also going to look at structures going to be really useful for optimal areas to trade from. So we've got two charts here. The one on the left is the 4-hour, whereas the one on the right is the 1-hour. So we can see we've got a 4-hour resistance formed. So this is shown here by these candles moving up and falling back down, moving up and falling back down. So if we label that on the 4-hour, what we do then is we look, okay, this candle here broke above to the upside. Okay, so that means that this structure level, this series of highs here, has been broken. So then what we will do, and when I say optimal areas to trade from, we'll zoom in down to the lower time frame. So here we're moving over to the 1-hour, and we're going to look at structure levels on the 1-hour. So here we can see we've got a low, a higher low, another higher low, and another higher low. So the series of higher lows on the smaller time frame is suggesting an upwards trend. We've also broken above a 4-hour resistance, which is really significant. So when we're actually taking positions, we're going to be looking for entries for buys at this zone. So here we can see when we broke up here, we came back down, retested it, and started moving up. And then here again, we came down, rejected this area, and started moving back up. Now, we haven't covered candlesticks yet, so don't worry if you don't understand how you could have caught this position right here. We will get into that, don't worry. But all you need to know for now is when these structure levels are broken, we'll then be moving down to the lower time frames to look for optimal trades or positions that have great potential. Okay, so, and the actual thing that helps this trade in particular is we've got these high lows forming, which is an uptrend. So we've got confluence of high lows forming and a breaker of a resistance. And then when we learn about candlesticks, we're going to look at how we can interpret this sort of pattern and candlestick formation here to potentially take buys to the upside. Okay, so let's move on. So choosing areas to take profit from. Okay, so on this particular chart, this is actually a position I took like, I can't remember, it was a few days back, I think. But let me just explain you through this. So we are taking a sell. So my trade was actually from here, and I was selling it downwards. Now let's use structure to understand why. Here was a low point, and this candle here broke all the way down below this low. It followed itself down and created a new lower low. So we've now got a structured low formed, which is lower than this one. So what happened is it moved back up. It created a resistance here. So it created a high. And when candles were forming in the particular direction that I wanted to trade, I took a sell. But the question for this is, where would you take profit? Okay, so some of you might already know how to do this, but based on structure alone, nothing else but structure, we're going to look at this low point here. If we've moved all the way up here, if we're taking a sell, where is the most logical place to take profit? The most conservative place to take profit, which enables you to get the improve your chances of winning. Okay, so here, this is the low point. This acted as a support or a place in which we bounced. So when we're taking a sell from this position, we want to take profit, all of profits or even partial, at this point. Okay, that is the safest thing you can possibly do. Let's have a look up left here. Okay, so if we just consider this to the left hand side, I hope you can see my cursor, where it says this low point. We moved up here, we created a high, we moved back down. Now, often what you find on structure is when price forms a high or a low, it will always want to retest that high or low, okay? So we moved up to create a high, we came down and formed a support with the show of this these little candles here. We're going to go into this in the next few videos, don't worry. But all you need to know is it's formed a support here. And if you was taking a buy, you don't want to put your take profit all the way up past this place. You want to take profit at this level, okay? So that's really important to understand. If you start getting into the habit of taking profit at previous and recent structure levels, you'll find much more success, trust me, okay? So, let's have a look at a few rules for structure. So, like I said before, uptrends, it will always be forming a series of higher lows. Okay, so the troughs on the chart are going to be forming higher lows, whereas in downtrends, it's going to be forming a series of lower highs. So the peaks are going to be gradually forming lower. Something really important to remember is whenever you're looking at structure, the most recent structure levels are the most significant. So what I mean by that is if we're looking at a 4-hour chart, or we're trading on the 1-hour chart for say, if we're looking at structure, we want to look at structure over maybe the last 2 days maximum, or even the same day. Weeks and weeks ago, we don't care about that now. That's old news. I know price repeats itself and it will always do the same thing, but the repetitions of structure will occur recently. If that structure level from the past isn't important anymore, it won't show in recent price action, okay? So remember that when you're drawing your structure levels, don't go back weeks and weeks. You don't need to do that. You're just going to clutter your chart. You want to be looking at, okay, what's happened over the last couple of days? What's the most significant peaks and significant troughs? And what is the trend for this recent time frame sort of thing, okay? Now, you always want to use a higher time frame structure to set your overall bias. So I recommend daily and 4-hour for that. You don't need to go to the weekly because we're essentially scalping. That's still getting a little bit out of hand and we don't need that. 1 month, forget about it for our style, okay? But daily and 4-hour, that is what I consider the higher time frames for our particular style. Now we're going to use the 1 hour and 30 minute to look for entries on your overall bias. So when like we showed in the previous example, so let's just go back to it here. So here, this was the time frame we was getting our overall bias for. So we saw that we broke above these highs, this structure level on the 4-hour, and then we zoomed down into the 1 hour and we would be looking for entries on here. Okay, so hopefully that makes sense. Okay, so let's have a look at a live chart. So I haven't done any analysis on this. Maybe there's nothing for us to see at the minute, but we're just going to bring up the GJ chart. So okay, so you should now be able to see this screen. Let's have a look. So we're on the daily chart currently. Now, as you can see, daily is, at first sight, looks a little bit messy. I give you that, don't worry. Okay? But let's zoom out a little bit. And let's say, okay, so let's consider this a low point. So all this here. And then let's consider this area here another low point. Okay? And if we zoom in then, we see we formed this high here. We came down at the same level. I wouldn't class that as a break below, because if you bring this left, you could also consider this the low. and we're gradually moving the way up. Now, this would be ultimate targets because this is the most recent significant high that formed. So if we was, now this isn't analysis that we might take, but I'm just giving you an example of how you can start reading it. So this would be based on the daily. If we, as long as we stay above this previous low level, we should eventually move up to get to here. But at the same time, we've got these highs which are acting as a structure level support, resistance. Sorry. Okay. Now let's scrap the daily and move down to the 4 hour, because every lower time frame will give you more information on what's happening. And often you'll find the 4 hour will be much clearer. So to me, instantly, we can see exactly what's happening here. We can start drawing on as lows, and this one's a higher low. And this, like I said before, is another higher low. And this one here, and this one here. Okay, so a series of higher lows forming means that overall we're in an uptrend. We shouldn't be looking for sells really. If you was looking for sells, and this is how I do it, this is the most recent low structure level. Now for me to get into any sells or consider any sells, I need to wait for this structure level to break, because if we then break this level, which is the most recent low, that means we've now formed a lower low. And if we form a lower low, that's then potentially moving from this overall uptrend of higher lows to now a potential downtrend, because you could consider this a high, and maybe this is forming a lower high. Now if we can come down here and break this level, that means we'll have formed a lower low. So then we can maybe anticipate price. One second, let me get my drawing tool so we can form a low, and maybe we can come up and form a lower high here somewhere. Okay, so that's an example of how we can look at the structure and say, okay, as long as price stays above this structure level, we're still in the uptrend, or as long as price stays below this, we're still in a downtrend. So hopefully that makes sense. So, okay, let's go back to the presentation. Okay, so we should be back on the presentation now. Yes, we are. Okay, great. Okay, now let's just simply, just for reference, I want to review a trade I took this morning, just so I can give you an idea of how I actually put this into place. I don't expect you to maybe be able to see this or be able to do this yet, but over the course of the videos, we're going to explain how you can look at candles with structure to actually take entries like this. Okay? So what I was seeing here is on the 1 hour, we had a structure level. Okay, so this was acting as a really strong support. Now, what happened over here? This red candle on the 1 hour broke all the way down. In fact, no, this is a 30-minute chart, but I drew the structure level on the 1 hour. So like we said before, we pick our structures on the higher time frames and we look for entries on the lower time frames. So here, this candle broke down, but the next one actually broke back up inside. So this is called a fake out. We're going to cover this in the next couple of videos as well. But all you need to know is this candle tried to break down, it couldn't, and it broke back in this consolidation range. Now what happens when that occurs is there's a higher probability of the candles actually moving up to the other side of the range, right? So that's something we're going to talk about in upcoming videos, but all you need to know is when this breaks like this and then it closes back inside, the chances of it moving to other side of the range to fill other upside targets is increased. Now that's the bottom structure level. I actually drew some minor structure levels on the really small time frame. So here we've got a high, a lower high, a lower high, and what happened is after this had faked out to the downside, my bias was then, okay, maybe we can look for some potential upwards movement. So I had a sell position, a pending order, above this high, because like I said before, if we're moving in a downtrend, so the series of lower highs forming, if price moves up above the most recent structural high, okay, that means the trend is potentially moving to the upside, and we've got some momentum to the upside, because now what we've done after it broke above here is we've actually formed a new higher high rather than a lower high. So my pending order was set here. This actually got activated, as you can see over here. This is the same chart. Okay, and okay, so let's use as point what we made in the first couple of slides. How do we choose a target from this trade? So if this is a structure level over here, what I've drawn on, so we see we've got clean traffic, clean candles moving all the way up until we get to here. That means that that's the most logical place we should take profit, okay? Because targeting beyond this is illogical. What's the chances of it moving past this? Sure, it can happen, but based on what we can see, and as traders we can only use our eyes to pick targets and know exactly what's going on. We have to trade what we see. We should always take profits at these sort of levels, okay? So that should make sense. So you can see actually here, my position was in a buy. It was moving up. I had my target just below here, just because I want to, oh, like I said in the previous video, I always want to take profits. So I don't want to risk it bouncing away from this zone. So here you can see it hit my target, and that was a winning trade this morning. So let's go on. Key points to remember from this video. For starters, I hope you enjoyed it more, because we're actually looking at something, and this is something you can actually go away after this video and apply to your own trading, and you can go and practice this, go and have a look at structure, see if you can find it, even send me charts what you've identified overall structure on the different time frames, and I'll have a look for you. Okay, so like I said, always check higher time frame structure each time you come to the chart. So get it into your trading plan. I told you you need to make a trading plan in the previous video. Make this one of the things you need to do every morning, every evening before you start trading. Okay? Now, you also need to be patient. We need to wait for price to come to your structure levels. The chances of you winning a trade is very much increased if your setup comes at a structure level. So say you've drawn on a resistance, so a peak. If price comes up to that peak and retests a high structure level and it starts forming indication to go to the downside, you've got a much higher chance of winning that trade and price actually moving away from that structure level. So that's just a way of increasing your chances. So you could even put that in your trading plan. No trades taken unless you say get to a 4-hour structure zone or even a daily structure zone, because the higher the time frame structure zones, the more significant they are. Like the most recent structure zones are more significant, okay? Now, take profit as price reaches structure levels. So I always look at the 30-minute when I'm taking positions. I will always look at the 30-minute, look straight to the left and say, okay, is there anywhere here which the price could possibly have trouble at? So is there a resistance on the 30-minute, or is there a support? So if we're in a buy and we see a resistance to the left on the 30-minute, at that resistance we need to consider taking partial profits or completely closing our positions and taking as profits, and be happy with that. You don't want to be greedy whatsoever. Greedy people in this game fail. Trust me when I say that. If you're trying to target past structure levels, past resistances, past supports, the chances are price is going to turn around from them, hit your stop loss, and either take you out of break even, which isn't the worst thing, but we'd rather have profit, or you're going to end up with a loss. And last point, I know I've said it enough times, but most recent structure is much more significant. Do not look at structure levels from weeks ago. I know obviously they do get respected, but for what we're doing and for the short amount of times we're actually going to be in trades, any structure levels to the left, which are quite recent, are going to act as much more significant barriers to price than anything else. Okay, so that basically sums up this video. I hope that was really informative for you. I'm glad we actually got to look at charts for once. This has provided an overall picture rather than how to take entries. The next video we're going to do, and part 4 this will be now, is how to read candlesticks, okay? So candlesticks are going to provide the really close-up, detailed information we need to say, okay, we're now at a structure level, candlesticks are forming in this manner, this is a good place to take a trade, and that's what we're going to start moving on to next. So be sure to stick around for that. Rewatch this video, take notes on it, go away and practice, and also rewatch the previous 2 videos as well, because the aim of this series is to provide a comprehensive guide from start to finish, and you can piece everything together, and hopefully you'll become a successful trader from this. It's not going to happen instantly, but over time, after practicing all these things, you should be in a good position. Okay, so thank you very much for watching. Don't forget to subscribe, and also thanks so much for the support. It's been crazy. I've got nearly 700 views between my 2 videos so far, and the channel's been up maybe 3 days. Also, check out my Instagram. Like I said, my Instagram's down at the bottom of the page. Message me on there, say you've watched the video, give me some feedback, and until next time, have an absolutely fantastic week and trade safe, guys.